Hi, this is Paula Waterman.
And this is Chris Waterman, the Denver Mortgage Guy.
We are going to answer some of your frequently asked questions about HELOCs. But before we get to that,
make sure you like, share, follow, and subscribe to this video. We really want to try to build our YouTube channel. We really appreciate if you subscribed and liked this video.
so a lot of people have equity in their homes, but they don't really want to refinance because maybe their interest rate is low. And we know that we've had a little bit higher interest rates. So what are some options for them?
Well, a lot of options for people right now would be getting a home equity line of credit. If somebody needs to pull cash out of their house, and look at pulling cash out of your house is a lot cheaper than using credit cards, right?
Yeah.
And mostly because of the way they're amortized. Someone would pull cash out of their house, they want to do some home improvement, refinish their kitchen, or they want to pull out cash to pay off debt, a car, student loans, car loans, those types of things.
Yeah, because a lot of credit cards have really high interest rates, right?
Yeah, all the credit card company have jacked the rates. I mean, they are up there 15, 20%, and most people make a minimum payment. And guess what? Those are designed to never pay off. At least if you get a mortgage or you get a home equity line credit, you're able to pay that down quicker and pay less interest, so more goes towards principal.
Yeah, and for cash flow purposes, it's nice to consolidate these high interest payments, and then you can free up your cash. Right?
Yeah. I was just thinking about the client we had last month that refinanced their home, had a whole bunch of equity, and I think they pulled out maybe $60,000 or $70,000 and paid off credit cards, high interest loans, and the savings to them was $900 a month. So they get rid of all of this debt and have one payment or two payments if it's a first and a HELOC. And guess what? Saving $900 a month. Not everybody's going to save $900 a month, but we have people save $400 a month, $600 a month.
That's a lot.
That's a lot of money.
Well, why would they want to use us instead of going to a bank or credit union?
We recently got the ability to help people with a home equity line of credit, which is a HELOC. Typically you would go to your bank or your credit union, and banks really aren't lending hardly at all right now, and they're super strict. I would say stay away from a bank for anything unless you want a checking account. Be serious. Credit unions have typically been good on car loans and HELOCs, home equity lines of credit, but they take a lot longer at a credit union, and they're going to require an appraisal almost every time. So most people I know who are getting a HELOC, home equity line of credit, it's a minimum of 4 weeks to 2 months. I've seen some people say, hey, I'm still working on it. It's been almost 90 days. So we have the ability now to help people, especially our customers and our clients and our referral partners, with a home equity line of credit. Right? So if you currently earn you have a first mortgage and it's a low interest rate and you have a bunch of equity, we can help you with a home equity line of credit, whether you want to just pull out cash or you want to pay off debt. There's a lot of options for you. And if the loan amount on the home equity line of credit is under $250,000, that's a lot, right? Under $250,000, there's no appraisal needed.
So Chris, what's the minimum amount that our business can round up for a HELOC?
The minimum amount would be $20,000. So if you want to get a home equity line of credit, the minimum amount we're going to have is $20,000. And that's typical with credit unions when they do them too. They typically want to see you get $40,000, $50,000, $60,000 line of credit.
Is there, what kind of payments are there? Is there interest only? How many years is it amortized for? Yeah,
most home equity lines of credit, you have a couple payment options. You could pay interest only for usually the first 5 to 10 years, depending on the type of HELOC that it is. So you can pay interest only, which is usually a really small payment, right? So you're only paying interest, you're not paying down the amount. And then you can pay an amortized amount where you can pay the interest plus principal just like you do on your mortgage. When rates dropped a couple years ago significantly, we had a lot of people coming to us who had a first mortgage and a second mortgage or a first and a HELOC, and we paid it all off. And then guess what? They got a whole bunch more equity, and it worked out good for them.
It's kind of what we did. I think we had a first and a second, and when the rates got really low, we just refinanced our whole mortgage and rolled it all in together, and actually had the same payment, but paid off our second mortgage, right?
Yep, that's a good way to go.
Yeah. You guys, don't be afraid of these rates. Everyone thinks that these rates are going sky high. They're actually pretty average.
Yep.
We have a lot of different programs, a lot of different options. Chris is really good at strategy. And if you want to kind of just talk through your financial situation, maybe see how you can free up some money or, improve your cash flow, give us a call. We'd love to talk to you about it.
Yeah, and we're local here in Colorado. We're licensed in Colorado. We've been working in Colorado. I started in the mortgage business in 1996, started my own business in 1999. So I've been a mortgage broker for 23 years and in the business for 25 years right now. So we have the experience. We can help you. We're super honest. Look at our reviews, Denver Mortgage Guy. Go look at the reviews on Google. We've done a great job for a lot of people. A lot of people trust us.
Yeah, and we'd love to help you. So have a great day.
Bye-bye.